Thanks for tuning into Stocks with Antonio. What a day in the market for Wednesday. We ended up having more of a pullback. Now, some of the investors probably watching this are concerned. Some of you might be panicking. Some of you may be selling some of the stocks that you own in your portfolio. But in my opinion, I see this as an opportunity to DCA into your long term and even get into some attractive stocks at good entry points for when this starts to recover. Because I believe we're going to go higher in 2026, and this is just a pullback. And February usually isn't the best month for the stock market. Now, what happened today, Wednesday? We had the jobs data come out. The U.S. economy added 130,000 jobs in January, far exceeded the forecast of 75,000. While this indicates the economy's resilience, it has led the market to aggressively price out potential interest rate cuts. Investors want rate cuts, right? When rates go down, assets go up. And in my opinion, I don't expect a rate cut in the beginning of the year. I expect a rate cut when Jerome Powell is no longer in the position that he's in right now. When he gets replaced, I believe we will start to receive or we will start to get interest rate cuts. So that will be after May. And that's just my opinion. And when that starts to happen, that's going to help the market go to new highs. That's why when I see these pullbacks, I'm looking at them as opportunity to increase my share count and my long-term investments, but also get into some short-term investments at good prices and sell them when they go up. You're really going to build your wealth when everyone's fearful, right? So when things are in the red, that's when you want to get in. That's when things are on sale. So if you were at the mall, if you're someone that likes to go shopping at the mall, right? If you see that, let's say the brand that you like is on sale, you're probably going to go into that store at the mall and you're going to take advantage of the sale. Well, look at the stock market that way. When it's pulling back, look at it as an opportunity. Now, one thing that may help you, because a lot of people hear this, like, hey, when the markets are pulling back, buy the dip, right? One thing that may help you have more confidence when markets are pulling back to potentially buy shares into a company you like is look at the chart. You know, you can go on Yahoo Finance, you can type in the ticker symbol of one of your favorite companies, and you can do it for multiple. And that's what I suggest. And look at the chart. You're not going to just see the chart in a perfect line going up. You're going to see it going up and down, up and down, up and down. And some of those moments in the chart that went down, you're going to see it have gone down more aggressively than others. But you're probably going to notice it went back up, depending obviously on the stock that you're looking at. But if you're looking at good companies, you should pretty much see it like this, and sometimes a little bit more down and then up, but you will see a recovery. That means when those pullbacks happened in that particular stock, those pullbacks were opportunities because the individuals that invested when it was down, right, they got the benefit when it went up if they decide to sell. Now, if you're investing long term, you may not worry about as much because if you're investing in good companies, you should be fine. But if you're looking more for the short term, that's what you want, right? You want to buy when it's down and sell when it goes up. So I just wanted to throw that out there for you. Now, everything that I'm going to be sharing in this video, everything that I have shared, is just me sharing my views, my opinions, and what I'm doing in my portfolio. Nothing's going to be a suggestion for you, buy, hold, or sell. Understand that investing carries risk. So if you do decide to get in the market, be safe, do your research. And when I say by being safe, is don't put money into your portfolio, into your brokerage account that you can't afford to lose. So just understand, hey, if you're going to put $1,000, for example, or whatever that number ends up being, make sure that if it went to zero, you'll be okay, right? Obviously, nobody likes to lose money. I don't want to lose money. But if you were to lose the money, you can still pay rent. You can still pay your car, whatever payments you have, whatever, whatever bills you have, you can still hopefully take care of them. If you're putting money in the market and that's gonna prevent you from being able to take care of your responsibilities, then obviously you're not ready to start investing. If you do want to invest, the best thing to do is make sure you set some money aside that you can afford to lose because investing does carry risk and we never know what can happen in the market, right? But in my opinion, I think we're going to go higher. I think these pullbacks or an opportunity. And I wanted to talk about SERV Robotics. Now, SERV Robotics is a high-risk stock. It's not a profitable company. It has a lot of challenges. But if you look at the chart, many times when it's come down all the way under $10, it has recovered and it's gone all the way up to $15. Last year went up to $18. And I believe service pulling back with the rest of the market. It's not pulling back because some negative news came out about server robotics and you see the rest of the market green and only service pulling back, right? It's pulling back with the market. Now, there are challenges. It's not profitable. It's a newer company, but there's also a lot of positives going on with the company. It has a contract with Uber Eats. It has a contract with DoorDash, 7-Eleven. It's deployed an additional 2,000 robots. They're continuing to grow. The company is looking to expand. They've gotten into new cities. Those are the things that you want to see in new companies. Is the revenue growing? For SERV on the last earnings report, it indicated yes. It indicated that they're getting more robots out. They're doing things that should increase the revenue and should hopefully one day get them into profitability. So in my opinion, this stock has potential to go back higher than where it currently is. Now, we do need to pay attention to its next earnings, which is coming out sometime in March. I don't remember the exact date, but it is coming out in March. Now, that is something you want to pay close attention to. If you are a short-term trader and you get into server robotics, if you don't really like playing the calls, not calls, sorry, earnings, you might want to sell before earnings if you're in profit, just in case that earnings doesn't come out the way you expect. Because right now, companies that don't, when the earnings come out that don't do well, they get beaten down pretty hard when it comes to price. The price they'll have a pretty significant sell off. So that's just something that you want to be aware of. But let me see here. So the opportunities why investors are watching serve robotics massive. Let me see here. So management expects a 10x revenue increase in 2026, targeting a jump from 2.5 million in 2025 to approximately 25 million as its fleet of 2,000 robots reaches full utilization. So they're definitely trying to continue growing the revenue, and they're doing that by deploying additional robots. So that's something that management's doing. They got their partnerships, like I talked about, with DoorDash, Uber Eats. So they're definitely growing, and they're going to new cities. And let me see here. What's another one? And they have a NVIDIA endorsement. Now, one of the cons, I will say, NVIDIA was an investor in this company. One thing that I didn't like, they sold off their stake in it. I believe it was sometime last year. So definitely look into that. But the CEO still remains saying positive things about the company, and that's huge. We know NVIDIA is a big boy, and when the CEO of NVIDIA talks about a company, investors are listening. So that is at least, he still says great things about the company, sees it as a good opportunity. Let's see here. Now, another one, okay. Now, this one again is risky. Some of you that are watching this may have this stock in your portfolio. If you have this stock in your portfolio, please leave me down in the comments below. What was your entry point? What did you get it at? And this one is going to be BBAI. Now, BBAI is sold off quite a bit. It was at some point last year over $9 a share. Some people said it was all the way up to $10. Now, I didn't see it at $10, but I saw it in the 8s. I saw it in the 9s. And since there, it's been pulling back quite a bit. It was maintaining between 5 and 6 for a long time. But with the market sell-off, it's pulled back all the way down to the 4s. And I think this is an opportunity right here. I think BBI getting it under $5 a share is not a bad place to start nimbling. And if it goes lower, which is a potential, it could go maybe under 4 to even buy some more. But I believe this stock has a potential of going back into the $6 and $7 range once the stock market starts to recover. I think BBI will go with it. Now, one thing that we want to pay close attention, because we're already in the month of February and March is around the corner. BBAI is going to have their earnings report in March. Usually BBI has not done well in the past when it comes to earnings, but their last earnings wasn't bad. finally an earnings for BBI that wasn't like the past where it was really bad. So hopefully this will be like last time, hopefully another positive earnings report, and hopefully they're growing the revenue. But here are some of the opportunities that could create a bull case for it. So national security demand. The company is well positioned for increased federal AI spending, participating in threats um, detection and mission automation. Okay, they also bought the Ask Sage, and that's expected to roughly add 25 million in annual reoccurring revenue. Okay, so hopefully we start seeing some of that when they talk about their earnings, since they acquired this company and cost them a lot of money. Hopefully they could show how that's helped increase the revenue. And they've improved their balance sheet, which is huge. So those are all some positive things about BBAI. Now, it is a high risk stock, but with the market pulling back and it being right now in the low fours, it wouldn't be a bad time to enter and get some shares. And as it goes lower, add. Now, that's if you decide. Now, that's how I see it. So I'm just sharing my opinion that I think at this price point, it's not a bad place to enter. That's why I'm looking at it and I'm watching it, because I may be adding BBAI into the portfolio, and BBAI also has a 2x for short-term trading, which is BAIG. Just wanted to throw that out there. But these are two stocks that I think are big opportunities. They are high risk, but I think right now the price points that they're at, they're pretty attractive in my eyes. And I definitely already have SERV Robotics in the short-term portfolio. I'm continuing to increase my share count as it's under $10. If it dips lower, I'll continue to do the same thing. I had a lot of success with SERV Robotics in 2025. Had some success with it in January, and hope to continue to rinse and repeat with SERV Robotics. So let me know down in the comments below, what do you think about SERV Robotics? What do you think about BBAI? Are you currently holding these? Let me know your views down in the comments below. I love to know what other investors think. Now, everything I did share with you is not a suggestion for you to buy or hold any of these companies or sell. I'm just letting you know my opinion on them, and I'm letting you know what I'm doing in my portfolio. If you enjoyed the video, please smash the like button. If you haven't done so, please consider subscribing to the channel. I really would appreciate it. Check out the description box, and thanks for watching, and I'll see you on the next one.